Hi everybody, I'm Sir GK Kidembe from Trading Wars TV, and thanks for joining me on this week US market weekly reports, analysis, perspective, probabilities based on my humble opinion. And let's begin for the time to trade the markets. Weekly vlog, the week ahead, perspective and analysis. First of all, we're gonna have a look at the economic calendar. Next, at some news for the cryptocurrencies and for the overall markets. Next, we're gonna have a look at the sectors map of the S&P 500, and next we're gonna do some charts. This is for trading starting on Monday, September the 11th until Friday, September the 16th, okay, of 2017. Okay, so now let's begin. Okay, people, first of all, here we are at tradingeconomics.com. That's the economic calendar. And on Monday, September the 11th, as you can see over here, what do we have? We have macroeconomic data release in Turkey about the GDP growth rates quarter on quarter for the Q2 and GDP growth rate year on year for Q2. On Tuesday, September the 12th of 2017, in Australia, we're going to have the NAB business confidence for August. And in Great Britain, we're going to have the inflation rate year on year for August. Excuse me. And on Wednesday, September the 13th of 2017, back in Australia, we're going to have the Westpac Consumer Confidence Index for September and the Westpac Consumer Confidence Change for September. And once again, back in Great Britain, we're going to have the claimants counts change for August and the unemployment rate for July. Okay, so now that's it for our economic calendar. Now let's move on and let's have a look at some great market news. First of all, a great news for the Bitcoin space and the cryptocurrencies. Over here, you see we are at Bloomberg.com. Bitcoin tumbles as PBOC declares initial coin offerings illegal. That's the Public Bank of China. And that particular article was released on September the 4th, but I thought that it was a good idea to talk about that since that release of that particular article. What have we noticed? We've seen a huge sell-off in the crypto space, and that was one of the major catalysts for that particular sell-off, if you like. So here is the article. We're gonna just read the first paragraph and the first two paragraphs over here, and next I'm gonna let you people read the entire article at your own discretion. Okay, so now let's begin here. Bitcoin tumbled the most since July after China's central bank said initial coin offerings are illegal and asked all related fundraising activity to be halted immediately, issuing the strongest regulatory challenge so far to the burgeoning market for digital token sales. The People's Bank of China, the PBOC, said on its website Monday that it had completed investigations into ICOs and will strictly punish offerings in the future while penalizing legal violations in ones already completed. The regulator said that those who have already raised money must provide refunds, though it didn't specify how the money will be paid back to investors. Okay, so if you want to read more, that's great. So what's the idea over here? There's some illegal activity is going on over there with ICOs, and people it's fraudulent. Not all ICOs, but some of them are illegal and fraudulent. So the Central Bank of China is entering to regulate all of that and to be like an inspector, a big brother over every ICO now and moving forward. So what we would see more regulations, and it's gonna be more strict and on the way that things are supposed to be, because when we talk about money, there's always frauds and scams and Ponzi schemes and stuff like that. So you see in the Bitcoin and the crypto space, things like that are going on a lot. Okay, so that's it. So next, let's move on now. Let's move on and let's have a look over here at Business Insiders. Now we are at Market Insiders, and let's have a look at the markets. Over here, you see the Dow. The last session was positive in green. S&P 500 and Nasdaq, a huge sell-off for the Nasdaq in red. So now let's have a look over here. What's happening? Yeah, the hack that was, if I remember, on Tuesday. No, on Thursday, Wednesday on Thursday with Equifax. The Equifax hack isn't the biggest security breach of all time, but it could be one of the worst in history for Americans. So read the article over here, and you're gonna see what's happening. Over here, stocks go nowhere. Here's what you need to know. Over here, Game of Thrones, but I don't know if it's market related, but... Next, let's move on. Let's have a look at stocks. You see the best performing on the last session for the Dow Jones. Over here, the worst performing on the last session for the Dow Jones. You see Apple breaking below the psychological mark of $160. Now we are at $158. You see that, on Tuesday, September the 12th, we're gonna have the launch in Cupertino in California, the launch and the new visits and great events for Apple, new products, new iPhone 8, new Apple TV, Apple iWatch, I believe, and some other things. So it's gonna be a great day. And you see before that, a price are selling off. So we're gonna have a look later. I'm gonna mark that, and we're gonna have a look at the Apple stock price action. Okay, over here, what do we have? We have Google News dashboard, make it easier to see what the company knows about you. Over here, Facebook says it's enabled to reveal the ads linked to Russia. Over here, a star from Netflix, Stranger Things, explained what the primary focus of season 2 will be. You see companies making the buzz. You see Netflix, Facebook, and Google. That's your thing. So here we are. Okay, next, moving on. Commodities. You see over here the performance of each one of the particular commodities. You see over here oil, the crude oil, WTI, still going down. Now we are below $48 a barrel. And that's it. Next, let's move on. Over here we have cars. While everyone was fixated on electric cars, Mazda quietly revolutionized another technology. Over here, here's a super quick guide to what traders are talking about right now, or maybe that is going to be interesting. So if you want, read that here, markets.businessinsider.com, and over here, have a look at the article. Here's a super quick guide to what traders are talking about right now on exactly the same thing. So let's move on. No, over here, currencies. Let's have a look. Last session, you see the euro dollar, the US dollar index DXY falling. You see the euro rising at 1.2035, and yeah, the US dollar is continuing to sell off, and we're gonna see exactly what's happening when we're gonna have a look at the charts. You see over here, pound falling against the dollar. US dollar falling against the Canadian dollar, US dollar versus Swiss franc, Japanese yen, Mexican peso, Indian rupee, and Russian ruble. It's stable. And over here, Bitcoin, US dollar, Bitcoin is going down, and Ethereum is rising a little bit. Okay, so that were the prices on trading on Friday, but the crypto prices actualize themselves each and every moment, as you see, and as you know, there's no market close for the crypto in the crypto space. So later on, you're gonna have a look exactly where the price are right now for the crypto, especially for Bitcoin and Ethereum, and also we're gonna take a look at some price action and technical analysis later on. Okay, so bear with me, please. Okay, here let's move on. Some news about the crypto space. Here, Bitcoin Howard Marks, I see no reason why Bitcoin can be a currency. Over here, Bitcoin and Ethereum. Survey, the majority of CoinDesk readers think there's a bubble in cryptocurrencies, and I think too, but you see, we are traders, so we trade what we see, we trade the markets, don't even care if the prices are going up or going down. Me, I'm speculating on cryptos with derivatives, especially with CFDs, as I already told you each and every week. So that's what I'm doing. Okay, so for me, doesn't matter if prices are high or low, we're gonna buy it or sell it short. So that's it, using leverage. Okay, and over here, Bitcoin Cash soars above $700. Okay, and here the bond markets, you see over here the yields. Yields for the 10-year notes 2.05, 30-year bonds 2.66. And over here, that's your rates. And over here, some news. You have Gary Cohn on the left side, and over here, Steve Mnuchin, Secretary of Treasury. And over here, Trump is reportedly unlikely to consider nominating Gary Cohn as the next Fed chair. Remember that last week we had a resign from Mr. Fisher, the Fed governor of the Fed of New York. He resigned, so that's a signal. Okay, so let's have a look at that. Okay, and let's take that into consideration. See, what does he know? Okay, so that's it. Moving on over here. Deutsche Bank CEO, a big number of our staff will be replaced by technology. So that's it. And over here, what you need to know on Wall Street today, and that's it. So that's it for the news. And now let's move on directly to some charts. No. First of all, we're gonna have a look over here. It's next gonna come back to the cryptocurrencies over here. Gonna have a look at some the sectors map over here, weekly performance for the markets, and let's have a look what happened last week. We see over here technology 50-50, but the big names in red, especially bad week for AT&T and Verizon over here. Services 80% in red, but bad week for Amazon.com, bad week for Disney, for Comcast. Over here 20th Century Fox, for 20th Century Fox here over here, that's your Time Warner, excuse me. And over here CBS Corporation, and over here Viacom. Great week for Home Depot and Lowy companies. And over here Basic Materials green, great week for ExxonMobil and Chevron. Healthcare in green, bad week for J&J, and over here in biotechnology industry for Regeneron Pharmaceuticals, and over here bad week also for Insights Corporation, and in healthcare plans bad week for UNH, United Health Group Incorporated. Okay, utilities green, industrial goods, let's say maybe 50-50. Bad week for in the defensive stocks, bad week for Lockheed Martin, for General Dynamics Corporation, and for United Technologies Corporation, UTX, and bad week for GE, General Electric Company, and over here for Honeywell International Incorporated. In the consumer goods sector, you see that's a 50-50, but great names in reds. PepsiCo over here, and Apple minus 3.25, minus 3.2%. That's great. And over here the cigarettes, Altria Group, and textile, Nike, bad week for Nike. And financial, worst performing sector for the week, financials, everything is in red. 70% in red. Investment banks are down. Goldman Sachs, Morgan Stanley, and the Charles Schwab Corporation leading the group, leading the downfall. Over here, credit services, bad week for PayPal, American Express, and stuff like that. Good week for Visa and MasterCard. Money center banks, bad week for JP Morgan, Bank of America, Wells Fargo, Citigroup, PNC over here, SunTrust Bank, and the other one, SunTrust Bank, yes, and Commerce Incorporated. Bad week for Berkshire Hathaway, AIG. Bad week for asset management, regional banks, life insurance. Bad week for the financial sector. Now let's have a look at the ETFs, or the markets in the overall markets. And over here, what do we notice? We noticed all US indices in red, bearish week. The inverse in green. US large cap in red, mid cap in red, small cap in red. Over here, all the the sectors. Financials, bad, worst performing sector. And energy, you see 50-50. Technology in red, but not so bad as financial, and everything else 50-50, let's say. And over here, the volatility, XIV in red, and the inverted VIX, and the VIX volatility index, the VIX in green. Over here, fixed income, corporate debt in red, and US government debt you see over here in green. So the indices are going down, and the sovereign bonds are going up. Over here, the global GDXJ, GDX, and Nugget, the JNOX, the gold miners, everything in green except for the dust and the GDST. Technology, you see over here, whereas hack, Pure Phone's eyes, hack rising, and we see the Equifax scandal and hack over here. So cybersecurity ETFs going up, and more risk of cyber attacks. You see over here energy, strategy, everything in green, and commodities, everything in green. Okay, so that's it for our ETF analysis. Now let's move on, and finally let's begin over here with technical analysis and the charts. And first of all, let's have a look at the Dow Jones Industrial Average. As you've seen earlier, markets are going nowhere. That's your resistance over here, 22,000 points. And over here, that's your support. Remember, those two candles canceled themselves. So really now we are at 21,800. And as you can see, that's an inside week candle for third week in a row. We are moving sideways. Markets are going nowhere. Take a look over here. Let me zoom in a little bit more so you can see what I'm talking about more clearly. You see over here, the region I'm pointing with the mouse, that's a convergence between the 4 weeks moving average and your 8 weeks moving average. And over here, what do we have? We have a failed interaction with the 13-week moving average. So now markets are trying to go down. We have a close below that particular convergence region. So now what are we expecting? I'm expecting a more sell-off, and the selling off to accelerate. But take a look, we are rejecting that particular region. We are rejecting the 2100 the 21,700 points, and we are kind of levitating, you see, at that particular level. That's our support. So now we are still above that particular region. So next week, what I'm expecting more sideways movements. Markets still tend to go nowhere, but that may be our first leg to the downside. A possible A, B, a C over here, and looking for a D over here. So maybe if we do have a sideways movement, I think that the market's gonna remain in that particular region between 21,700 and 21,800. But if things accelerated and the sell-off accelerates, boom, there you're gonna see more moves towards the downside in direction of the 21-week moving average, and maybe we're gonna reach over here that pivot points region, that B, C to the D point. Maybe the market can go lower, and at that point the 21 weeks moving average will reach that 21,500 points region. Okay, so that's it for your Dow Jones Industrial Average. Now let's move on. Let's have a look at the Nasdaq 100. Yeah, I'm gonna skip the Nasdaq composites, but the Nasdaq 100, it's more accurate, it's more fun to look at, and I prefer to look at the Nasdaq 100. So that's the reason why several times I'm skipping that particular index. Okay, so now let's have a look over here, and what can we see? We see exactly the same thing, but not exactly, but over here what is exactly the same as Dow Jones and inside week candle, but here we are still bullish over here. We are still in a uptrending, we are still uptrending over here. Let me demonstrate to you what I'm saying by that. You see that's your supports over here, and if I clone that particular trend line support and I'm putting it here down there, you can clearly see our A, B, C, and then boom, D over here. You see, I was expecting here the Nasdaq to have a continuation, but it didn't happen. So now I'm expecting it to happen right here, and I'm gonna do something, put it like that. Okay, so we have a difference between the dotted trend lines and the direction lines. Yeah, now what we can expect. Let me zoom in a little bit more so we can see things with a better perspective and more clearer. Okay, that's a big zoom now, not too much. Okay, just like that, it's perfect. Okay, so let me explain that to you. Over here you see, what do we have? That's your resistance, you see over here. And now I'm expecting markets, since we are in a inside week candle, but take a look, we are now we have a close below the 50% of that particular bearish bullish candle over here. So now if we trade below 59,000 points, that's a huge signal and maybe a confirmation for the market to sell off, you see over here, and to go towards the downsides, towards the region of the 8 weeks moving average here, the 4 weeks moving average, and that's your 13 weeks moving average over here, and that's your uptrend channels supports close around 58 50 58 40 points for the Nasdaq 100. And in other case, if we reverse that, and that's just a pause and a horizontal move, that's indecision, and we regain momentum and we regain power to go much higher above 6,000 points, market can go much higher and reach over here the 6,100 points. That's the region, that's the resistance level region. And so we are gonna complete our ABCD, you see, so to speak. But remember, we have a gap up over here, a bullish gap. That gap must be filled, and how can we fill that gap? Going lower and reaching the support over here, and then bounce back from here, and then boom, going up. So let me explain that to you. I'm gonna clone this one, boom, there you go. I'm gonna come here, so that's it, that's the move. Okay, so if you continue to go to the downside, we come here, maybe we can fill that particular gap, bounce back over here. Take a look at the price action. You see, if you see a close above the 4 weeks moving average, from here, boom, we have a free trade from 5900 towards 6,000 points. So that's great. See, that's a 100-point gain, and that's money right there. Okay, so there you go. Sip a little bit of my tea. Okay, so let's continue. Next, what do we have next? Next, the S&P 500. We already took a look at the sectors map. So now let's follow. Let's go to the next step, next phase. It will be the S&P 500 charts. Okay, over here, US 500, Standard & Poor's 500, and over here, let me zoom in first of all to have a better view and a better understanding of what's happening of the price action. And what's that? Because I have things over here. Oh yeah, that was no. I'm gonna quit this. I don't like it. Okay, boom, like that, and over here, and this one also. We don't need stuff over here. That's exactly the same thing as we saw earlier with the Dow Jones and with the Nasdaq. You see inside week candle over here, bearish week, gap down over here. You see here the gap up, bullish gap must be filled. And what do we have? We have a good morning pattern. You see over here to the downside, boom, back here at that particular support. We see support. We are rejecting lower prices. The market doesn't want to go below 2400 points. You see over here 2420 as support. You see region of the 21-week moving average bouncing back up from here. You see, boom, take a look, 2 weeks towards the upside. You see the convergence region of all these three particular moving averages in red. That's your 13-week. Here in the middle, that's your 4 weeks moving average, and here that's your 8 weeks moving average. Or now we are still above that particular moving average. You see over here a rejection, but interaction with the 4 weeks moving average and your 13 weeks moving average in red. Rejected it, gained back points from the market, and boom, close over here at 2460. Okay, so now what can we expect? If that's a real rejection, you see over here, take a look historically what happened in the past. So maybe open over here and then boom, going back towards the 2480. And if you can break above the 2480 points of resistance, now we have the max high at 2490 points, and maybe going towards the 2500 points for the S&P 500. But still we are in indecision inside week type of pattern. So now I'm expecting the market to move sideways, and with the right catalyst we can see a huge movement, but now we need more volatility. But still you have to remember that over here between 2350 and 2370 we have a huge gap, a 20-point gap, you see. So that's huge. That's almost 1%, 8.0, that's 0.8%, less than 1%, but that's a huge gap, okay, for the S&P 500. Now let's have a look at the VIX, the volatility index. Okay, volatility index over here, and boom, take a look at the VIX. You see huge spikes, huge gap up, that's huge volatility, but you see that particular range we're in. Over here you have your supports now at 10 points, 950, 10 points as support. You see resistance over here with the moving averages. That's your, in green, that's your, exactly, that's your 208 weeks moving average, and the other one in reddish, the reddish one, that's your exactly, that's your 104 weeks moving average. So you have a huge range, almost 4.5 points of spread and of volatility. So that's huge for the VIX. So you can you have to be cautious, you see, trading those markets, you see, because volatility is pretty high now. Market is at max high, you see, still below right below the 22k point. And so now we are seeing that we need something big, see, to go much higher, but from there you can also a sell-off can occur. So now we have to protect our capital and make sure that when we are trading we are doing it in the right way with the right stops and taking advantage of those movements, you see. But be cautious out there, okay? Now let's move on and let's have a look at the XIV. Okay, over here, XIV. And now for the XIV, you see over here a month in inside week candle, strong bearish. That's a huge bearish candlestick over here. So maybe that's our first leg of that's the first leg of the sell-off, and now I'm expecting the second leg of the sell-off, and for the XIV on the markets to reach 64 points. And you see, by the way, you're gonna feel the gap over here, that bullish gap over here, and from here maybe you can bounce and then boom, going back up. And that's the region also, that's also the region of the 52 weeks moving average over here. So that is very, very possible. And take a look over here at the particular pattern and positioning of all the moving averages over here, 8 weeks and 13 weeks in convergence. Over here you have 21 weeks, 26 weeks in black, and over here that's your 4 weeks moving average, all moving sideways. So that explains the 1, 2, 3, 4 weeks a month, all the yeah, from August till September, the XIV going nowhere. Okay, so be aware of that and make good decisions when you're gonna trade those markets. But me, I see a great potential. It's gonna be better for the XIV to continue to have a second leg down and to reach the 52 weeks moving average, and from there let's see what's gonna happen. You see over here support that pivot point region coincides with 64 points, and 64 points, that's our target and support. That's also the region of the 52 weeks moving average. Okay, so now let's move on, and now let's have a look at the Russell 2000, the small caps. Oh, every week the same thing, always with Russia. And no, I'm not a fan of the singer. Me, I love the markets. Okay, there we go. And over here, what can we see? Huge from March, from since 2017 we are going nowhere with the Russell. We are in a trading range, kind of going up in a uptrending channel. But you see over here resistance that's higher highs each and every time, but the lows remain flats, remain horizontals, but kind of higher lows are also, but not so much. Okay, so you see that, but you see that over here the Russell already reaches reach the 52 weeks moving average over here and bounce from there. You see over here close above the 4 weeks moving average. Excuse me, let me zoom in so you can see it more clearly. Okay, perfect. Now you see over here 52 weeks moving average, you see going down, boom, rejected, boom, bounce. You see here a rejection, a reversal, bullish reversal. You see, boom, 4 weeks moving average, boom, below the 4 weeks moving average, close above 4 weeks moving average, 26 week, 21 week, 4 weeks, 13 weeks, boom, that's it. And now you see over here sideways movement for the moving averages, sideways movements also, but that's a bullish flag over here. Indecision, you see, that's not a complete rejection, that's not a complete reversal. We are still above the 50% of that particular bullish candle over here. That region is marked by the convergence between the 4 weeks moving average and the 21 weeks moving average over here at 1400 points. And from now, maybe that's our first leg up here, A, B, and C over here, and then our next leg up towards the 1440 region, and that's our max high and also our resistance. You see, I was expecting that particular move, but didn't happen last week, so we are in a kind of pause moment, going sideways and waiting for the right catalyst to see that uptrend momentum regaining power. Okay, So that's it for your Russell 2000. And now let's have a look at treasury notes and bonds. Number one, over here, our 10-year treasury notes. Where it is? Yeah, okay. Okay, that's it. Okay, perfect. You see the uptrending channel over here, support, over here, resistance, over here we had a flat resistance. You see that's your 208 weeks moving average over here in green, your 52 here in pink. You see from here, boom, 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 up. You see, take a look over here. That's all our moving averages going sideways, but now starting to go with an angle. You see, 4 weeks, yeah, with an angle pointing upwards. So that's a sign. You see over here, resistance, perfect resistance. That's your 104 weeks moving average, 104 weeks moving average over here, acting as a strong resistance. You see at $128. But now what are we expecting? We are above. You see here that particular candle acting as a pointer, as we mentioned last week. You see the resistance was $127. Gap up, boom, above that particular level. You see 208 week moving average was our resistance, and now we are between those two particular moving averages. 208 weeks are acting as a support and 104 weeks acting as a resistance. Now, what are we expecting? I'm expecting the markets to go much higher from here. You see, boom, like that. And here now I'm expecting the market to go higher, but we need a strong move. And what can be the trigger for that? A sell-off in the markets. You see, we're gonna see money flowing from the stock market and entering the fixed income market, and especially the treasury notes, the 10-year treasury notes and the 30-year treasury bonds. So remember, if you see a higher bonds price, that means a lower yield. So that they are inverted. Higher bond price, higher notes price over here, that means a lower yield. Okay, let me save that particular setup. Okay, and now let's move on over. Oops, sorry. Okay, now let me do that with the touch screen. And now, yeah, the 30 years. Oh, what's the thing with Hersher? Okay, there you go. That's your T-bonds, 30 years T-bond. And over here you see the uptrending channel. You see over here, take a look. Now we've been out of that particular channel, but now we are still close to the resistance. Now we are going back in. And now what's happening? You see, I can also do that. See, you can also put that way, and that still that works. See, okay, so now that's exactly the same thing. This particular one, I can see from there. I was expecting that move happened. So here, from here, now we have reached the region of the 104 weeks moving average. You see all the moving averages over here are below that particular bullish candle, and all of them, the principles, the most important ones, the 4 weeks moving average and the 8 weeks moving average, converted with the other bigger moving averages, bigger in digits, but now they are crossing over and going up. Okay, so now they're acting as they're giving that impulse to the price action, and now we can see prices moving higher. You see markets above, excuse me, $157. Here resistance, we need to clear that level, and going above that, above 159.50 and have a close above $160, and then we can see more moves towards the upside. And as you can see, the potential for the bonds to go up is gonna be huge. But also remember that we are here. Maybe that's a B, a C point, and maybe that's the first leg down. You see from here, from 177, that's our first leg down. That's just a pause, a correction in that sell-off, and maybe next we're gonna have a continuation in that particular sell-off. We don't know, but if we do see prices going up, now what we need to see, we need to see a convergence between the 4 weeks moving average and 8 weeks moving average at that particular region. Once those two moving averages are going to reach that particular level and going up and cross above the 104 weeks moving average, that's going to trigger a huge run, a huge swing, a bullish swing, a bullish rally towards the 166. See over here that particular region, pivot point region over here, resistance and support. Okay, that's exactly what I've mentioned, and what I meant by that is that what I mean by that is I mean that we can see a huge run. So what it's gonna do to the yield of the bond? The yield of the bond is gonna go lower. But in the other case, if that's just a B over here and C, and then we're gonna see bond prices reject that particular region and starting to sell off, the yield curve gonna go higher and the bond price gonna go lower. Remember, they're inverted. So we're gonna see what's happening. We're gonna still gonna have a look at fundamentals and what's gonna happen, and we have to be cautious. You see. And the goal over here is to be ahead of the curve, and that's in one word, anticipation. Okay, we need to anticipate those movements and place orders in accordance of what we see the sentiment is what the market's gonna do ahead of time, and profit from those movements. Okay, now the Dixie US dollar index. Boom, a US dollar index. You see a huge sell-off. You see over here, pam 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 pam. Dixie is going down. You see over here the US dollar is going down. You sell off. You see over here that's your 2-week moving average. Remember last week we have compared the Dixie with the euro dollar. You see that the euro dollar is in a bullish. That's the opposite, and also the euro dollar reached the 208-week moving average, acting as a resistance. Over here, the 208 weeks moving average is acting as a support. But here, pay attention to one detail in particular. What was that detail? The thing I'm talking about is this. You see over here, we have a convergence between the 4 weeks moving average and 208 weeks moving average. And what I mean by that that now if we see the 4 weeks moving average still continuing to going lower, next phase for us, let me amplify, we're gonna see the bigger picture, and the bigger picture is this. You can see this happening. Let me go way back. And what I mean by that is, here is what you can see. Okay, there you go. You see over here, that's a pivot point, that's a resistance, and that's 83 points. You see, this is called a range, a trading range. We have a resistance over here marked by a pivot point, and a support over here. You see that was our first trading range from 73 to 83 points. So that's 10 points. And next we have over here, 73, and over here that's 89, let's say. So that's 15 points. And from here, 89, 88 towards 104, that's another 15 points. Okay, so we have trading ranges and intermediate trading ranges and resistance and supports in between those bigger ranges, and now we are noticing exactly the same thing. Okay, so now if we go back, first targets below that particular point, the target will be over here, 89 points over here. Okay, and maybe we are starting to see another sell-off for the dollar, another type of movement and stuff like that. So we need to pay attention, close attention to those stuffs and those details, and to be able to recognize patterns and anticipation of movements. And that's it. That's the key of that's our task, you see. That's what we do. We trade those markets. Okay, so that's it for the bigger picture. So remember, if we are noticing and witnessing more selling off of the US dollar, so we're gonna short that particular market. But remember, we are in a currency war. Remember that the US doesn't export nothing, and the other countries like China, like South Korea, the Eurozone, and Japan, Canada, Mexico, the Mexican peso, they are all exporters. They export goods and services, oil, precious metals. They export some goods, cars, Chinese goodies and stuff like that, and Chinese product. So having a weaker dollar, it's not good for them. They need the dollar to go up, but we are here in that particular range. So for the deficits and for the US deficits and for the other countries for their surpluses, you have to take a look at what is doing to those economies and see the forecast and the projections for their surpluses and their exports. So you have to know now that all the exporting countries they need to manage a weaker dollar, so that doesn't benefit them. I'm gonna repeat that week and week after week, because that's the key over here. Currencies is for macroeconomics. We trade them, but with the perfect edge for we traders, it's that we need to understand fundamentals and we need to understand the economies of those particular countries. Okay, and the most simple thing and the thing that has the most impact, you see, on the currency, that's the status of the nation. I mean, what I mean by that, I mean if the nation is an exporting country running a surplus, or if the nation is an importing country running a deficit. And by that, we're going to see and you're going to know exactly what it means for them. Take a look at that. The dollar is weaker. And since the US dollar is weak, we're going to do a quick compare. We're going to compare that quickly with the over here with the Dow Jones Industrial Average. Oh, no, not like that. Excuse me. I don't want to do it like that. No, let me do that another way. Let's see over here. Okay, we're gonna do that like that quickly. I'm gonna understand what I mean by that. We have a weaker dollar. We need to understand what that weaker dollar meant for the market. And that weaker dollar, what it did for the market is this. Since we have a weaker dollar, we saw, boom. Okay, let me do this 20 back. Okay. See over here, we need to compare exactly what took place. You see over here, the dollar, and here that's your Dow Jones. You see over here, take a look, when the dollar started to weakening, bam bam bam, dollar being cheaper, take a look at what happened with the market over here. The market started to going up. You can say to me, oh yeah, but the market was going up over here. Each time the dollar is weakening, you see a push towards the upside for the markets, because if the dollar is weak, that means that US stocks are cheaper. People can convert the currency into dollars and entering the stock market. And also you can have a look at take a look at the Brexit phenomena. Take a look at the GBP, the Great British Pound, in relation to the FTSE. What does it mean? Weaker currency. Those countries doesn't export. They do not export. They don't export goods. What they did with the currency, if they have a weaker currency, means that our stock market is cheaper. It's cheaper for international investors to convert their currency into pounds and into dollars and to buy the stock market. Okay, and that doesn't mean weaker currency is not good for US exports, because the US doesn't export nothing. But what does it mean? It means that stocks are cheap. And take a look at that over here, 2017. Since 2017, boom, what do we have now? Dow at 22K. So maybe that's that. If now we see the dollar going higher, maybe we can see a sell-off in the market, because you see that's one part of it, because you see that central banks can do whatever. So they can manipulate interest rates, they can do more QE, and now you see that in October the Fed already announced that they're gonna start dumping treasuries and do stuff with their balance sheets and stuff like that. So you see anything can trigger a sell-off in the markets. But the most important thing, you need to take a look at that. You see weaker dollar, boom, Dow going up since 2017 over here. You see the mark, 2017. So think about that and take a look. You see antes, before it wasn't so obvious, but now it's more obvious. You see those things, but remember, they can do whatever. So be prepared and be safe, be cautious when you're going to trade, and take advantage of that. Me, I'm just bringing you information. I know I'm not the more articulated person out there and stuff like that, but you see, that's information for our community. So take advantage of that. Take that and analyze it, do your research, and you can come up with your own trading strategies and systems and stuff like that. That's gonna benefit you. Okay, so that's it. Okay, now let's move on. The Dixie. Now what are we gonna do? Yeah, you're gonna have a look at crude oil, energies, CL, crude oil. Okay, over here. And for the crude, remember, it was a great week for ExxonMobil and Chevron and companies like that, but here is that great shape and good shape for the energy sector reflected here in the oil price? Absolutely not. You see A, B, C. You see now we have a double pointer here, one towards the downside, second one, and that's a tweezer bottom over here. We are rejecting lower prices. Take a look over here. We're rejecting those prices. That's a support. You see over here lower lows and lower highs. But over here, take a look at the downtrend channel. That's your support. That's your resistance. A break above. Boom. You see the movement A, B, C now. And we're going now for a D. So now over here, maybe that's our pointer, but that's also our max resistance and max supports. That's a trading range. So you can see prices moving sideways, and already take a look at the over here. Take a look at the moving averages. They are going sideways. So that's a signal of sideways movements. So now what can we expect? If we have a close above the 4 weeks moving average, a close above that particular region, and next another one above the 52 weeks moving average. Take a look. 13 weeks moving average acting as support, 52 weeks moving average acting as resistance, and all the rest of the moving averages in between. 21 weeks, 4 weeks, 8 weeks, and 21 weeks in black over here. So now you see that the half of that particular strong bullish candle, we are still in an inside wick candle for 2 months, all summer in inside wick candle above the 50%. So we're still bullish over here, but now we need a confirmation. So that's A, B, C, and then boom, D coming back here and going higher in a greater A, B, C, and D. That's our uptrending channel over here. Okay, that's it. So now remember, over here sideways, and we need confirmation, and we are going to start to build that bullish momentum slowly but surely. Okay, over here, boom, it's going to take time. Maybe in October, we can have in October or mid-October over here, you can see oil prices at 50, or if things accelerate, you can see oil prices moving much more higher but faster. Okay, so that's it for oil. Now let's have a look at precious metals. First of all, your gold futures. And over here, what's happening with gold? Gold, strongly bullish. Oh, what's that? Oh yeah, here, strong bullish momentum for gold. You see over here uptrending. You see the support over here. You see the movement. Bam, over here, 1360. Now maybe you're gonna see a sell-off. Remember, now we have a gap over here. We are way too much extended, way far from the 4 weeks moving average, and now maybe you see that's indecision. That's an island also, so maybe you're gonna see sideways movement trying to reach and retest that particular support, the 1300 support, and bounce from there and then going higher. You see, as I said earlier, now that's our A, B, C over here, and D. I see gold at $1,400, $1,400 per ounce for gold. Troy ounce for gold. Okay, take a look at that. Boom, we've reached that particular pivot point, that particular resistance here at 1360, and now we are moving higher. Taking a look at the big picture. Okay, yeah, that's from here. This one I'm gonna remove that. Okay, and now taking a look at that, what do we see? You see exactly A, B, C, and boom, now we need that particular point over here. That's our channel. See, like that. So now we can do that. First of all, we can do that particular move, but we need gold prices above that particular region over here. You see, like that. We need gold now above that particular region, and then boom, going higher. That's our max goal, to reach 1480. But in the short term, if you clone that particular thing, if you come here and bounce from here, first of all we have 1440, and let's see if we have a resistance at 1440. What do we have back there at 1440? See, for gold we have that particular region over here. Yes, here the 1430. You see here 1400s, 1440, and we have a gap over here. See, a gap down at 1500s, between 1500 and 1480. $20 gap down in gold. So that's huge, and that gap must be filled. So you're going right away to fill that particular gap. Okay, so that's it. See over here, see the gap? Wait, the gap, boom, that particular gap here. Okay, this one over here, see? Bam, bam. And now what we are gonna do, you're going higher. Okay. Okay, here. So that's it. You're going up towards that particular level over here. Okay, so now let's have a look at silver. Silver futures. And what do we have for silver? Exactly the same thing. Silver in a bullish mode. You see over here, downtrend channel, the resistance, boom, break above. Now we're going back towards that particular region over here. Do you see that multiple top over here? One time, two times, three times, and now it's gonna be the fourth time at 1840 over here. So I remain bullish on silver. So we're gonna see silver at $18.55 an ounce, a troy ounce, by let's say mid-October, or maybe before, in 1 week, 2 weeks, I don't know, but that's it. But remember also, if you take a look at the price action, what do we have? We see over here 52 weeks moving average, boom, above, convergence between the 4 weeks and 52 weeks moving average. Let's see, you see from here, that's your 4 weeks moving average guiding, leading the way of that particular rally. You see over here, that's your 208 week moving average, and over here below, all the other moving averages. You see also the 4 weeks moving average following the 4 weeks moving average, and that's a strong support for our strong bullish rally over here. Okay, so silver remaining bullish. Maybe a retest is coming to retest and to have an interaction with the 4 weeks moving average, but overall we remain bullish. You see, like we saw earlier over here, see strong 3 weeks higher, boom, coming back to retest, and then boom, going back higher, retest, going back higher, and that's just a step stairs pattern, an uptrending step stairs pattern, and that's it. We remain bullish on silver. Now let's enter the crypto space. First of all, we're gonna have a look at Bitcoin versus the US dollar. Okay, here with Bitfinex, let's see if I have my presets over here. Okay, perfect. But first of all, we're gonna have a look at the World Coin Index to see a little bit of performance for the our top 10 cryptocurrencies. Number one, Bitcoin. You see over here, we have the last price at 42, a little bit above $4,200. You see selling off, we were at 80 billion market cap, and now we're back at 70 billion market cap. You see downtrending, you see, for the last 7 days. Number two, Litecoin also going down. Ethereum also going down. Now we were close to 400, and now we're back at $300 over here. Bitcoin Cash, you see, still bullish. We were close to 700, and now we are at $572 a coin. And over here, Monero at the 5th position, also trending down, going down. Number 6, Ripple, doing good. Ripple really good, doing good. But you see the pattern for all the crypto following Bitcoin and all the altcoins. You see in the last 24 to 72 hours starting to sell off. You see over here. And but Ripple is going back. Ripple had reached, if I do remember well, the 30 cents per coin, and now it's going back. It was at 15 cents a coin, reaching 30, and now back at 20, but still in a bullish momentum. Omisego OMG over here, going down 5% last session. 8 Ethereum Classic also going down. Over here NEO number 9 going up. You see huge that horizontal, you see resistance supports over here. $23 and number 10 Kitum, and out of the top 10 it's your Dash. Okay, that's it. So now let's go back to the charts, and over here Bitcoin versus the US dollar. What can we see over here? You see top over here, see your resistance at 45, 47, rejected the 5,000 points, exactly 49.90, and now that's your sell-off distribution. But you see exactly, I'll remember also the article, you see for the Public Bank of People Banks of China, the PBOC. You see over here that was the right catalyst. You see a sell-off, huge volatility, you see, but people are gonna that's a leading indicator, and that's the right catalyst and the right moment to do to take some profits. So the smart money, that's what they're doing, they're taking profits. Okay, but take a look over here, that's your perfect A inception point of that particular bullish rally. A, the B over here, the C over here, and now the D. See, the movement is complete, but now we are gonna repeat that pattern in A over here, B over here, C over here. Interaction, you see interaction with what? With the 13-week moving average over here. So I'm expecting the Bitcoin to go lower, much lower. We over here reach $3,500 and bounce over here, and boom, then going up towards the 5,000, and next Bitcoin to 6,000, and repeat the pattern. Okay, so now I expect the Bitcoin maybe to stabilize over here, but I think that we're gonna have another huge week sell-off. You see over here, what was the pattern? Indecision, 1, 2, boom, 3 weeks to the downside. Over here, indecision, 1, 2. We have 2 more selling off weeks. I'm waiting for more sell-off. You see, that's not over. We need interaction, a complete interaction with 8 weeks and 13 weeks moving average, and that's it. And maybe, and then boom, we're gonna see sideways. Now we're gonna see sideways movement. Take a look at the moving averages, 4 and 8. Maybe 4 and 8 gonna converge at some point over here, and then closer to the, see, you need a narrow spread. The spread is too wide. That's a wider spread. Wide spread means huge volatility. Narrow spread, lower spread between those 3 moving averages means lower volatility, and then maybe interaction convergence, and from there it's more easier to see bullish signals, and from there bouncing back and going back higher. So that's what I'm expecting. The convergence point for me is going to be between 3,500 and 3,800, and from there I'm expect to see some bullish confirmation, and then I'm gonna start buying and trading towards the upside. Still in speculation mode, not investing in Bitcoins for my e-wallets and stuff like that. No, all that I'm doing right now, that's a full disclosure, only speculation with CFDs, that's derivatives, using leverage, not using a debt, not my money. Me, I'll just put 10% of my money, and then boom, I'm taking credit and for the 90%. And then but taking advantages of the sell-offs or skyrocketing prices of the Bitcoin. And now Ethereum versus the US dollar. You see exactly the same thing over here. That's your A, that's your B, that's your C. You see here the cup and handle, boom. So that's completed. You see here resistance, you see high, lower high, That's a bullish flag. And now what are we expect? We are expecting, you see, if use Fibonacci, that's much more than a 50% retracement, going back over here, and now boom, just building a uptrending step stairs pattern. But now you see the bigger prices, the projection is going to give me Ethereum at $521 in the future, because we are still in that particular uptrending channel. You see resistance, that's the inception, no, support, excuse me, inception over here, support at $40, here resistance at 364, the C point here at 170, and boom, now we are trying to reach that particular level. So that's your A, your B, your C, and your D over here. But now we need to clear that particular level, and that's your cup and handle. You see over here, your cup, your handle, and then boom, going up towards the upside. Okay, so that's it for this week. Thanks for being with me, hanging with me for these trading on these particular analyses. And here's my website and the translation, the web page, the translation in English is coming. So if you wanna hang with me, see what I'm doing at the jctrim.com. That's our company, a consulting company. We are in wealth management and asset management, and we are also in the gold space and silver space. I'm an IB, introducer broker, so I work with a brokerage firm over here in London. I'm based in Madrid, but we also have an office over here in Madrid. I'm working also with those companies. I'm an agent, a registered agent under contract with Uporos. So we provide, we specialize in gold and silver. I manage clients' accounts, and we have vaults over here in Switzerland and also in Asia and Hong Kong, Singapore, and other stuff. But by clicking over here, you're gonna have access to our webpage, so you can see what we are doing. And over here in Madrid, for people interested in numismatics, coins, and all the stuff, I also have an accord with the I collaborate with the particular company over here, the Gusa, here in Madrid, and also in Switzerland, in Zurich and in Geneva. So we're also doing great stuffs. And that's it. So come here to the page. Next week the page is gonna be updated, and so we're gonna have the updates in English, so you English speaking people can come and have a look at what we are doing. For the moment, the link is not working because we're working on that particular page. So you're gonna have all the our history, and our services translated in the English. So be patient, okay? But by the way, you can contact me here. We have a special number for Viber, WhatsApp, and Facebook Messenger, and our office also, okay? So be safe and have a great trading week. Protect your capital, make money, make wise and educated decisions, and I'll see you next week, guys. Okay, thank you very much. Bye bye.